today's video, I'll go through how I banked 3,600 Aussie dollars in profit on PEPE, the in markets that sold off. The main thing I want to do here is to teach you how to take advantage of up and down price volatility. Even if the markets are coming down, you can still do really well. I applied a scientific method and you can too. I'll explain. Let's run the numbers. Welcome back, Elite CTKS Service members and CTKS Method students. If you're not a student, you might find that this particular information is fairly technical, but it's got a lot of benefit to you. The background: yesterday the S&P 500 could have gone either way. I was mentioning in yesterday's video that it was absolutely critical to look at the RTY, the Russell 2000, especially on the futures. One thing to note: I always draw lines so I get the most precise timing signal I can get. Because I lean in and lean out with quite heavy positions, it's very important that I don't miss out and just do very fast decisions. The cost of a slow decision is absolutely monumental. The first thing that I would advise, just make sure that you pick up the free cheat sheet from ctksmethod.org and you understand intercorrelation and interconnection. If you're just trading the chart that you're putting money into and not observing price action, you're in a lot of trouble. One thing that we saw yesterday, the indexes were weakening, but there was a potential uptick in Bitcoin. Now that meant that the indexes could strengthen, but we needed to be very cautious. In terms of market permission, it was cautious optimism and potential negative momentum for the crypto market. This is because all markets are intercorrelated and interdependent. This is Rule 446. Just a helpful note, when we look at the Russell 2000, the reason we do that is that the smaller indexes sell off first. You can see the Russell selling down, then the Dow, then, for example, the S&P 500 and NASDAQ around the same time. I will not take any trade whatsoever if I don't know the cheat sheet from row 1 and row 2, which measure risk on behavior or risk off behavior, to understanding how that behavior in row 1 and row 2 flows through to the major market indices, and of course that flows through to the stocks. Row 5, 6 and 7 are the new economy, the crypto market. Crypto is incredibly volatile. That means you can make a fortune from it, but you need to deal with exponential price action. And therefore, we must always stack probabilities continuously. One thing that I mentioned in yesterday's video, we were coming up to overhead structural resistance in the SPX or the S&P 500. This gave us a caution signal, and because we have X-ray vision, we knew exactly where that structure was ahead of time. The one thing to understand, if the S&P 500 broke out and rallied, it would do very, very well and pull Bitcoin, crypto, everything with it. Don't forget, I'm trading PEPE in this particular example, and I do PEPE because PEPE pays. But if the major market indices decided to retrace, that would actually retrace Bitcoin and crypto and PEPE. So yesterday, that was the backdrop, and I made around $3,600 Aussie from PEPE. I'll explain how I stack probabilities. First of all, I use CTKS structure and a very simple rule. This rule is so simple, it's overlooked by most people. It's Rule 760, start small and then scale. The other thing to note, this profit on PEPE was made through spot trading. Absolutely no leverage whatsoever. I went long, and you can do spot trading profitably in any market condition. The focus is to buy low and sell higher. You don't have to buy the bottom, you do not have to sell the top, but you should focus on making a profit and not being correct, just being profitable. What I typically do is to look at structure and target a rate of return. If I'm unsure of what the market is doing, I will ramp up feeler positions. First of all, to start small and scale, look for low percentage turnovers. If you do a percentage turnover and do it consistently, it can add up to incredible gains. Because you're literally recycling your money back into the market. You're using the money over and over and over again. And remember, all of the things that I do inside this community are no leverage. So what did I do exactly? You can see this around $3,600 Aussie profit was $22.53 US dollars. You'll see that I was doing just very mild feelers on 1.2% profit, 1.2, 1.2, 1.2, and this is a feeler position. Feeler positions I just set at 10%. Because honestly, I don't care about them. I can leave them overnight, I can leave them anytime, they can just sit in the market. That is the literal definition of a feeler level. You have to feel it so minimally that it doesn't actually matter. But the interesting thing is feelers do still make profit, and that profit can grow. When I saw that the market was kicking up, I extended the sell levels. You can see that here and that here. And when we add all of those little babies up, it comes to that, which comes to around that 3,600 Aussie dollar profit. Now the thing with feeler positions, if you've ever worked out, ever lifted weights or done any kind of weight training, you'll know that in order to ramp yourself up to higher weights, you have to keep consistent. Because if you find that you're lifting really, really heavy weights and you stop doing it for a while, you literally reset yourself back and back and back. Please let me know in the comments if you know what I'm talking about. The concept is feeler positions keep you inside the market. They are return irrelevant levels. Literally, the return on a feeler level should be absolutely irrelevant to you. It keeps you coordinated into the chart price action. This is the key. If you get disconnected from the chart, just like getting disconnected with anything, it's a big problem because you'll have to spend time and money getting connected again. Now, what typically happens if something goes up and then it goes down, people sell out at this point and then they wipe their hands with it, become disconnected, don't do feeler positions, and by the time it's actually turning around, which is soon after they sell, most of the time, they've completely disconnected from that particular chart. Therefore, lost all of those fantastic opportunities in the same time. The other key to note that is I was actively trading, not passively trading. Active trading is when you put position sizes into the market throughout a particular window. You might start at one time in the day and close off at another time. You can see that the feeler levels are passive trading, but it's almost like a form of irrelevant trading because you're not actually looking at them. Feeler levels are not about profit. It may sound really counterintuitive, but it's absolutely correct. Active trading is where you manage everything. Passive is where you let it go. And irrelevant is where you just don't care. For students from the Profiting from CTKS Method structure, make sure that you check out Lesson 10 in Week 3, Active Trading. Because I was actively trading, I closed out before the US markets open, and this is the real drama with the Australian market. It starts when the US market ends, and it ends, well, basically. You have to wait after midnight for the US market to open, and I'm just far too old for that. So what we saw at the time of this recording is tariffs again, auto tariffs hit the US market and people got really jittery and started to sell down. But we saw a lot of weakness inside the Russell, and that's why we were cautiously optimistic because Bitcoin was doing very well, but at the same time we were cautious. In yesterday's video, I talked a lot about the Russell 2000 and the fact that you really needed to keep your eye on it. It can be a really good forward indicator of the crypto market. And of course the stock market as well as commodities. It's a ripper. Fast forward to this morning, when the AU trading was done and dusted, look at what the S&P 500 did. It actually retraced. Naughty tariffs. In truth, these tariffs coincided with overhead structural resistance. We'll look at that in just a tick. Because literally the greatest liquidity on the planet doesn't occur when I'm trading, I need to be very, very careful in how I read charts. We literally need to look forward into the future to understand. For example, we know that the S&P 500 was coming into this 5782 structural resistance area. It pinged it and look what it did. It had a structural fail on 5769. We have X-ray vision. We know exactly where the levels where smart money will come in and out of the market. And as soon as we lost and did a structural failure on the 5751, that was throwing all of these structural support levels down from 5704 and around the 5691 mark into play. It's vitally important that you understand where the structure is inside the market. And many people would say, but can I just trade PEPE, just like me, and I don't look at these things because they're not important. Oh boy, are they important or what? Now, what does this mean to the S&P 500 going forward? It means that we have underneath structural support, and even if we lose these levels around 5691, so long as there's not panic inside the market, the 5672 is looking quite good. Now, what does all that mean? It means the crypto may well rebound, go down a little bit and then shoot up. Now, that will catch everybody off guard, but not us. Why is that? Because we know where the safety nets are, we know how strong they are, how clustered they are, all in advance. We have X-ray vision. And what did Bitcoin do? It came down. So it didn't come down big time, but it came down. And if we look at this particular chart, this initial level of support, we've not done too well in there. We've just been consolidating sideways since about the 19th. Do we have the probability of coming down lower? Yes, it could happen. Do we care? Absolutely not. So long as we know the structure, we can make money literally every single day. The signal that I'm looking at personally is the Russell 2000 futures. As this comes down, I'm really keen on understanding where it will bottom out. And through the service indicators, we can look at the Russell to look at its structure. I showed you the service indicators on the S&P 500 that were responsible for the bounce inside yesterday's price action. You would have seen a bounce up inside the crypto market. Why? Because Bitcoin came into structural support around that 85,900 area and bounced through. That was quite strong and led to an upward surge. And we had a very similar thing occur inside total crypto market cap. And of course, your structure across, if you're trading PEPE, you really absolutely must have the structure for Bitcoin and total. And this particular rapid assessment is available through the profiting course. One thing to note is the S&P 500 is potentially under pressure because the VIX futures are sparking upwards, and we can see the index futures are all coming down. Always keep your eye right across different markets, even the Forex market and the yields as well. One thing that I would suggest that you do, it's a very important thing, ignore market sentiment. The mainstream media news and the headlines, I said lies and I meant it, they will absolutely wrong foot you all the time. Having been inside financial markets for nearly 4 decades, you're going to find that different news sources will report on the same thing from at least 3 different perspectives. Same thing, 3 different outcomes. If you want to get opinion, no place like the news. Instead, if we focus on CTKS structure, the intercorrelation and interdependence instead of the news, which kind of feels weird to do. After all, doesn't the news, the headlines and the mainstream media, don't they actually move price? No, of course not. The charts have already associated whatever positive or negative momentum is already there. They're just advising the people who don't know what's going on. They're advising them. So when it comes to the news, please be careful. And the issue is, just revise lesson number 3 in week 1 of the profiting course. You can make money trading up or down, going long at spot, because you can. The 7 Secrets to Consistent Profitability is a good one, the foundations for analyzing CTKS structure, and especially Lesson 10, Right, Wrong, or Profitable. And I would also suggest looking into Week 3, Trade Perfection. Trade Perfection is a nasty, nasty business. All of those retail influencers who shill coins and do all sorts of things, there are some good people out there, but even those people can be very retail focused. It takes decades and decades to break through trade perfection. Trade perfection is just rubbish, and I'll just explain that to you a little bit more. Have your trading plan, know your trading goals, and decide, are you actively trading, passively trading, or the new way, irrelevantly trading? So how it applies is just like this. This is PEPE. These are all my sells. You can see my sells in red and my buys in green. The green ones are either feeler levels or actual position sizes. And what I want to explain is that retail trade perfection would go something like this. I call it RTP. RTP says, oh, you didn't sell right at the top and you didn't buy right at the bottom. You're not doing a hole in one every time you play golf. You're not doing a knockout with every punch, and you're not doing a home run every time you hit the baseball in baseball. So, oh, you must be doing it wrong. This is just nuts. But people get sucked into this rubbish all the time. As a veteran inside the markets, I see it all the time, and I've made it my mission to stamp it out. And the only way to do that is to help you to see it. And as far as I know, I'm the only person that's doing this. I haven't come across anybody else. But if you have, please let me know their names in the comments, because I'd like to check it out. One of the things, if you didn't manage to sell right on that spike, you would have suffered probably around a 10% loss. That kind of wipes out the whole wonderful thing. Oh, I sold right at the top. Who cares where you sold? Did you make money? Yes, tick the box. That's all you need to do. Don't forget what the markets look like. The markets were a little bit teetering on the blade of a knife as the trading positions went through. And when I saw that the market was taking off relatively positively, and this is against a backdrop of the Russell coming down, the Dow coming down, the S&P 500 coming down, the NASDAQ coming down, I was cautiously optimistic, but I was still cautious. I have no interest in gambling. Again, I'm simply too old. Retail trade perfection is a nasty, nasty thing, and it's something that you need to break away from. So you might remember a couple of days ago I did this trade on PEPE, and this trade was nearly $11,000 Aussie in profit. So what we've been looking at just across the past couple of days, nearly $14,500, or call it $14,300 worth of profit just on PEPE. That's not including other trades I did. And this market is all over the place, but it doesn't matter. All that matters is you approach the market with a scientific perspective. They say that up to 95% of people get wiped out when they trade and invest. I believe it's because of retail trade perfection, which is just another way to kiss your money goodbye. Therefore, moving away from retail thinking, I believe, is the first step to consistent profitability. And for profiting students, please revisit Lesson 1 and Lesson 2. Think differently about profits, and you can't be successful until. Lesson number 5 is particularly good. It's gaining ultimate security. Inside this world, things are becoming increasingly turbulent. If you know how to make money without a boss, without selling anything, without an office, without staff, only your knowledge and your capability to think differently and non-retail, you're going to find a completely different life awaits you. And can you imagine if children were taught how to trade effectively just from when they're little kids? Oh my goodness, the world would be so different. But not if they're taught retail. Focus on becoming an institution of one. That's what we're all about here. We think institutionally. So there are 3 secret weapons that I use to profit like this in any market condition. And these are very, very recent trades. They're literally across the past couple of days. Many people wouldn't even participate inside the market because they feel uncertain. Not so for us. Please just focus on putting feeler levels in. That could be as little as $10 a trade. Always make sure you know what the cheat sheet is doing row by row by row. This is absolutely vital. Of course, you can focus on momentum and direction, but you need to focus on structure. For example, we knew that the S&P 500 was coming up to structural overhead resistance in the last session, and then it sold down. This is not something that we were talking about this. I said it in the video. Just be careful. We're coming up to resistance. We could sell down, and we did. And why did Bitcoin and total bounce, which led to a bounce in PEPE? Because they hit structural support levels and flipped up. The majority of people who watch the daily video are already inside the service, and if you're not inside the service, you really need to be. If you want to make money in these markets, you must be able to mark up your charts with level 1 and level 2 standard certification. Or alternately, you can make me your slave and I'll mark it up, and that's exactly what the service does. The other secret weapon that I use, I have the PEPE Extended Indicator Yearly Access. I've literally made nearly $15,000 in profit over the past couple of days just from this indicator. You must be able to put all the levels, the intercorrelation and interconnection together. So therefore, make sure that you keep on revising the Profiting from CTKS Method Structure course. It literally puts everything together, and I do trades day by day by day. You're literally looking over my shoulder. What do you do from today onwards? Please keep in mind that the cheat sheet, you should be looking at this each and every day. It's absolute gold. One of the things that a lot of people do, they just think to themselves, oh, look, it's not so important. I'll do it tomorrow. If you want to make money, do it each day. And through the profiting course, I can show you how to do it in about, well, literally under 15 minutes. And especially focus on CTKS structure. For example, if Bitcoin starts to go higher, well, that's fantastic. And we'll keep our eyes on the structural levels to see how things interplay and read between and through the charts. And if PEPE gets above its overhead structural resistance, it can do really, really well. It can retrace literally all of that. Just one thing to note, and this is not something to keep you out of the market, it's just something that you should note. The VIX futures has spiked up like crazy. I would always suggest that you just use your feeler levels first and then start to layer your position sizes next. When we look at the sell levels on PEPE, they're not too bad, and this is just doing very small increments. And then when we see things are looking better, we can ramp up the rate of return. But we're not trying to pin the bottom, we're not trying to pin the top, we're just seeking to be profitable. And earning $3,600 yesterday just from PEPE, this is only from PEPE, is not a bad thing to do. One of the things I also wanted to do, I wanted to keep these position sizes smaller, because in the other example the position sizes were larger. So I just wanted to just keep it down to show you that you can make fairly substantial money even if you're not outlaying much. And when you become a master at spot, of course you can do derivatives and leverage, all that kind of thing, because you know what you're doing under those circumstances. And when you start to ramp up the particular levels, and depending on how the market is moving, you can do really, really well. So if you think just over the past couple of days, nearly $14,500 just in profit, that's not too bad. And that's just from one thing, PEPE. You'll find that when you think from an institution of one perspective, you don't need to be involved in all of this like Lambo money, McDonald's money. That's just irrelevant. You can make money in any market condition. If it goes down, you can make money. If it goes up, you can make money. You can make money in any market condition. All you need is the knowledge. It's very interesting that there was a quote around the place and it said something like this: if you think knowledge is expensive, wait till you get the bill for not knowing. And that bill is literally everything. Please let me know in the comments if you have any questions or you would like me to dive more deeply into any specific part. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.